Hey, it's Chris Doherty, Doherty Properties, coming to you from my Chelmsford, Massachusetts office to answer a question this week that I'm being asked a lot, and that is, what is the effect on the market now that the mortgage moratorium has ended? And are we going to see a major spike in foreclosures? And how is that going to impact the market? I'm going to answer that today for you. On September 30th of 2021, the mortgage moratorium had come to an end. And what this program was designed to do was to protect homeowners so that banks could not foreclose on their property. And this was a protection that was provided because of the pandemic, because a lot of people had lost their jobs, because the economy was in a strange situation, and people were in a very difficult position because of COVID-19. The government offered this protection to stop or halt that foreclosure process. On September 30th, that protection has ended. So now you're going to see banks start to initiate the foreclosure process that they were putting on hold because of the protections that were provided by the federal government, okay? And so the first thing is, we know that we're going to see an increase in foreclosure activity. That much we know. But this does take time. There is a process that takes a while before you'll see a foreclosure take place. The second thing that we know is, right now there's 1.6 million people that have been protected by the program who are late on their mortgage in the United States. So that 1.6 million people are now going to have to deal with the initiation process as it proceeds. But the third thing that we know is this, that of those people, of the 1.6 million, 98% of them, 98% have 10% or more in equity in their homes. One of the great benefits of this great climb and appreciation in values on real estate is that the people that have owned their homes, even though they are late, the values of their homes have been climbing in price, so they have equity. Unlike 2008, when people didn't have equity, this time they have equity. So what does that mean? It means that if people cannot become current or work some type of agreement with the bank so that they get back on track, they're going to have to sell their properties, but they should be able to, because they have a buffer that's in there. Yeah, there'll be some late fees and there's going to be some non-payments for a period of time, but they still might be able to sell without having to do it in the process known as a short sale, where they don't have enough money. They'll have enough money to sell the property, okay? And so what I anticipate is going to happen is, you're going to see an uptick in foreclosures for sure. That is 100%, because we just know there's 1.6 million people that are in that process. So the second thing is that of these people, they are going to have to make a decision. One, cure the situation by coming up with some money or renegotiating with the bank so that they can get back on track. Two, sell their property. In either case, they should be in a good situation, because most of the people have equity on their home, so they should be able to get out roughly level at where they were, okay, or even better. Or the third is that they can rent their property. Rental prices are on the rise, and we are seeing renters paying more and more in rent, which is likely to cover the mortgage nut on these markets, on these homes. So a third exit strategy for these foreclosures, for these foreclosure situations, is somebody could also rent their home as an alternative if they didn't want to sell, to try to help stabilize them in this situation. So I think that, yes, we're going to see an uptick in foreclosures, definitely. And you're going to see some of those foreclosures come to market, for sure. But it's not like 2008, because right now people have equity. But what will happen is, more of these foreclosures come to market and for sale. That's going to help free up some inventory, okay? And as the inventory frees up, it's going to help stabilize pricing for the sale market. So I anticipate more foreclosures, not as bad as everybody is reporting or thinking, because there's a lot of equity there, and the rental market is still strong, so people can rent the homes if they don't want to sell them. So there's a couple of ways out right now. So I anticipate More of that coming to market, a little bit helping in terms of inventory and cooling prices, but I don't think we're in a situation like we are in 2008. I hope that helps. I hope you guys are doing great. We've had another great real estate week, and I look forward to the week ahead, and I hope to see you guys soon.